Good morning and welcome to the Perivis Brief, where we bring you the key corporate updates that matter in just a few minutes. Please note that this is AI-generated content and may contain factual inaccuracies. Always consult original data before making investment decisions. Let's dive straight into today's key corporate news. Earnings season, standouts and surprises. It was a busy day for earnings, with several companies delivering strong numbers and a few notable disappointments. Starting with the consumer and manufacturing space, Cera Sanitaryware surged over 5% after posting robust FY25 results, announcing a hefty 65 rupees dividend and completing a share buyback. Similarly, KPR Mill rallied nearly 10% on the back of strong profit growth and a 250% dividend, reflecting continued momentum in the textile sector. In chemicals, Yasho Industries reported 20% volume growth and a 17% EBITDA margin, with management guiding for 40 to 50% revenue growth in financial year 2026 as their new plant ramps up. Fine Organic also delivered healthy margins and strong export growth, with capacity utilization near full. Healthcare saw a flurry of updates. Dr. Reddy's Laboratories posted a 17% jump in revenue and a 22% rise in Q4 net profit, driven by global generics growth and recent acquisitions, including the Haleon NRT portfolio and a new joint venture with Nestlé. Biocon reported an 8% revenue increase and a 28% core EBITDA margin, highlighting new biosimilar launches and regulatory wins. Jupiter Lifeline Hospitals continued its expansion, with FY25 income up 17.5% and new hospitals planned in Indore and Thane. In financials, Bank of India delivered a strong set of numbers, with fiscal year 25 net profit up 46% and Q4 profit up 82%. Asset quality improved, and the bank declared a 4 rupees and 5 paise dividend. Cholamandalam Financial Holdings reported a 23% rise in profit and 28% growth in total income, though the stock fell over 6%, possibly on profit-taking or missed expectations. India Shelter Finance stood out with 35% assets under management growth and a 53% jump in profit, maintaining strong asset quality. Jindal Stainless posted a 5% increase in revenue and a 7% rise in profit, while reducing net debt and focusing on capacity expansion. Shyam Metallics saw revenue up nearly 15% and EBITDA up 19%, though full-year profit dipped due to acquisition-related adjustments. On the flip side, Grindwell Norton dropped 9% after its results, with the market possibly reacting to a chief financial officer change and profit booking. Swiggy reported strong top-line growth, food delivery gross order value up 18%, and Instamart more than doubling, but posted a consolidated net loss of over 3,100 crore rupees, reflecting heavy investments and impairments. The company completed its initial public offering during the year. Birla Corporation delivered a mixed bag. Q4 profit was up 33%, but full-year profit fell 30% due to pricing pressures. The company announced a major capital expenditure plan to expand cement capacity by 38% by fiscal year 29. Eveready Industries saw profit rise 24% on the back of a strong battery segment, though lighting and flashlights remained weak. Thermax grew revenue by 11%, but net profit slipped 2% due to higher technology costs, even as the order book expanded. Relaxo Footwears reported stable margins but a year-on-year profit decline, with management focusing on restructuring and digital transformation. MapMyIndia, also known as CE Infosystems, posted a 34% jump in Q4 revenue and a 22% rise for the full year, with a strong order book and expansion into Southeast Asia. Great Eastern Shipping saw a slight dip in profit, but maintained a robust balance sheet and announced a total dividend of nearly 30 rupees per share. Aditya Vision continued its growth trajectory, with revenue up 36% compound annual growth rate over 3 years, and net profit up 37%. The company now operates 175 stores and is targeting 20 to 25% compound annual growth rate going forward. Kirloskar Ferros reported 7% revenue growth and stable profit, with Q4 profit more than doubling year on year, aided by operational improvements and the commissioning of a solar plant. Paisalo Digital and Jindal SAW both saw their stocks under pressure despite solid operational performance, likely reflecting broader sector sentiment or legal overhangs. Strategic moves and orders. Shriram Finance acquired Soipil to enter the primary dealership business and is restructuring its overseas subsidiaries. HUDCO's assets under management jumped 41% year on year, and its AAA stable rating was reaffirmed by CARE. Reliance Power reported a Q4 profit of 126 crore rupees, reduced its debt-to-equity ratio, and signed a 25-year power purchase agreement for a 930-megawatt solar plus battery storage project. Honasa Consumer received NCLT approval for its merger with Fusion Cosmeceutics and Just 4Kids, pending final clearance from the Delhi bench. Management and board changes. There was significant management churn across several mid-cap names. Cyient DLM's Chief Executive Officer Anthony Montalbano resigned, with Managing Director Rajendra Velagapudi taking over operational control. Puravankara appointed Mala Nasasalu as Chief Executive Officer for South, while Group Chief Executive Officer Abhishek Kapoor resigned. The company also announced a major joint venture for a 3,300 crore rupees Bengaluru project. Titagarh Rail saw its CEO for passenger rail systems step down, with Chief Transformation Officer Vijay Subramanian stepping in as the new CEO. Manappuram Finance named Deepak Reddy as its new CEO, effective August, while Nandakumar VP continues as Managing Director. Jupiter Lifeline Hospitals announced multiple senior management changes, including a new CEO, CFO, and joint managing director. Grindwell Norton appointed Prakash Sabarad as its new CFO following Hari Singudasu's resignation. Other notable changes include the resignation of the Chief Operating Officer at Protean eGov, the Chief Business Officer at Krishna Diagnostics, and the CEO for Laminates at Century Plyboards. Keynes Technology completed its acquisition of August Electronics in Canada, expanding its North American footprint. Credit ratings and other developments. HG Infra Engineering saw its ratings upgraded and credit limits increased by ICRA. Samhi Hotels ratings were placed on watch with positive implications due to a proposed GIC transaction. Summary. To sum up, earnings season continues to deliver strong performances in select sectors, especially chemicals, healthcare, and financials, while some companies are facing margin or demand headwinds. Management changes are notable in several mid-caps, which could signal execution risk or strategic shifts ahead. Capital expenditure and expansion plans remain robust across cement, healthcare, and specialty chemicals, and most large caps delivered results in line or better than expectations. That's it for today's Perivis Brief. If you found it useful, feel free to pass it along to someone who might too. See you tomorrow.